Imagine two people, each starting with the same $1,000. Fast forward 10 years and one has barely grown their money while the other has turned it into over $20,000. What's the secret? It's not luck, intelligence, or even how much they earn. The real difference lies in their strategy. Today, we're diving into one of the biggest debates in personal finance: long-term investing versus trading. Which is better, which is riskier, and most importantly, which one actually builds real wealth? By the end of this video, you'll know exactly which path fits you best. When it comes to growing your money, the difference isn't luck or intelligence. It's all about the strategy you choose. Whether you're aiming for steady growth or quick profits, your approach will shape your financial future. Today, we'll break down the core strategies behind long-term investing and trading, helping you understand which one aligns with your goals and personality. Let's start by exploring what long-term investing really means. Long-term investing is simple at its core. You buy assets, like stocks, index funds, real estate, or ETFs, and hold them for years. The goal isn't to make a quick profit but to benefit from compound growth over time. This approach is about patience and consistency. Instead of chasing daily price movements, you let your money work for you, growing steadily as the years pass. Let's see how compounding can turn a small investment into a substantial sum. Imagine investing $1,000 in a stock that grows at 10% annually. After 1 year, you have $1,100. In 5 years, your investment grows to $1,610. After 10 years, it's $2,590. And after 20 years, it's over $6,700. That's the magic of compounding. Your money earns more money, and the growth accelerates over time. You're no longer working for money. Your money is working for you. This is the foundation of long-term wealth building. Trading takes a very different path. Instead of holding assets for years, traders buy and sell frequently, aiming for short-term profits. There are several types of trading: day trading, where you buy and sell within the same day; swing trading, where you hold for days or weeks; and scalping, which involves trades lasting just minutes or seconds. Traders focus on price movement, not long-term growth. Let's look at how trading works in practice. Picture this. You buy a stock at $100 and sell it at $105, making a $5 profit. It sounds easy, but the reality is much more complex. Markets are unpredictable, and prices don't always move in your favor. Trading requires constant attention and quick decisions, and the risks are high. Unlike investing, trading is about capturing small gains quickly, but those gains can easily turn into losses if the market shifts unexpectedly. Let's compare investing and trading side by side. Investing requires a low time commitment. You can set it and forget it. Trading, on the other hand, demands hours of daily attention. Investing carries moderate risk, while trading is much riskier. The skill required for investing is basic knowledge, but trading needs advanced analysis. Stress levels are low for investors and extremely high for traders. Returns are slow but consistent for investors, fast but inconsistent for traders. There's something most so-called gurus won't tell you: most traders lose money. Studies show that around 80–90% of traders fail in the long term. Trading isn't just about skill, it's about emotional control, discipline, timing, and risk management. If you miss one of these elements, you lose money. Meanwhile, long-term investors benefit from overall market growth. Even average investors can win by staying consistent. Let's look at person A, a trader who starts with $1,000. They make a 10% profit 1 month, raising their balance to $1,100. The next month, they lose 15%, dropping to $935. They gain again, reaching $1,050, but lose again soon after. After a year, they might still be around $1,000, or even less. Trading is a roller coaster, and the ups and downs can wipe out gains quickly. Now consider person B, a long-term investor. They invest $1,000 in an index fund and add $100 every month. With an average return of 10% annually, after 10 years, their investment grows to over $20,000. The secret: consistency and compounding. By sticking to their plan and letting their money grow, they build real wealth over time. The combination of consistency and compounding is what sets long-term investors apart. By regularly adding to their investments and letting time do the work, they achieve results that traders rarely match. This approach doesn't require constant monitoring or advanced skills, just patience and discipline. Over the years, small contributions add up, and the compounding effect multiplies your wealth. Trading isn't just about numbers, it's about psychology. Traders often fear losing money, crave quick gains, and may panic sell or overtrade. The emotional roller coaster can lead to poor decisions and losses. Success in trading requires strong emotional control and discipline, but even the most skilled traders can struggle with the mental demands. Investors, on the other hand, rely on patience, discipline, and long-term thinking. They aren't swayed by daily market swings or hype. Instead, they focus on their goals and stick to their plan. Wealth is not built on excitement, it's built on consistency. The calm, steady approach of investing helps avoid costly mistakes and keeps emotions in check. Trading often looks exciting, fast money, fancy charts, and social media hype. But the reality is much tougher. It's extremely difficult to succeed, and most traders end up losing money. The excitement fades quickly when losses pile up. Investing, on the other hand, may seem boring and slow, but it's powerful in the long run. The steady approach wins out over time. So which should you choose? Trading is exciting and promises fast money, but it's risky and stressful. Investing is slow and steady, but it builds real wealth. If you want stable wealth, have a job or business, and don't want stress, choose investing. If you're ready to lose money initially, can spend hours daily, and are emotionally strong, trading might be for you. The choice depends on your goals and personality. It's true, trading can make money. Some traders succeed and earn quick profits, but the odds are against you and the risks are high. Success requires skill, discipline, and emotional strength. For most people, trading is a tough path and losses are common. If you're considering trading, be prepared for challenges and setbacks. Investing is the proven path to building wealth. By starting small, staying consistent, and thinking long-term, you can achieve financial freedom. The biggest returns come to those who wait. Investing isn't about excitement, it's about patience and discipline. If your goal is freedom, not just quick cash, investing is your best bet. You don't need a huge amount of money to start investing. Begin with what you have and add to your investments regularly. Consistency is key. Over time, your small contributions grow and compounding accelerates your wealth. The most important step is to start and stay committed to your plan. Long-term thinking is essential for building wealth. Don't get distracted by daily market swings or short-term hype. Focus on your goals and let time work for you. The biggest returns come to those who are patient and consistent. Investing is a marathon, not a sprint. Compounding is the secret weapon of investors. As your money grows, it earns more money and the growth accelerates. The longer you stay invested, the greater the effect. Even small amounts can turn into substantial wealth over time. This is why consistency and patience are so important. Markets are unpredictable and prices can swing wildly. Traders try to capitalize on these movements, but the risks are high. Investing, on the other hand, relies on the overall growth of the market. By staying invested, you benefit from long-term trends, even if short-term volatility occurs. Trading demands strong emotional control. Fear, greed, and panic can lead to costly mistakes. Successful traders must manage their emotions and stick to their strategy, even when markets are volatile. This is easier said than done, and many traders struggle with the psychological challenges. Investing requires discipline, but it's a different kind. Instead of reacting to market swings, investors stay focused on their goals. They follow their plan, make regular contributions, and let time do the work. This steady approach reduces stress and increases the chances of success. Risk management is crucial for both traders and investors. Traders must set strict limits and manage their losses carefully. Investors diversify their portfolios and avoid putting all their money in one asset. Both approaches require awareness and planning, but the risks are higher for traders. Trading requires advanced analysis and quick decision-making. You need to understand charts, patterns, and market signals. Investing, on the other hand, only needs basic knowledge and a clear plan. The skill barrier is much higher for traders, making it harder for beginners to succeed. Trading is stressful. The constant monitoring, rapid decisions, and unpredictable outcomes can take a toll on your mental health. Investing is much calmer. You set your plan, make regular contributions, and let time do the work. The low-stress approach of investing is better for most people. Investing delivers slow but consistent returns. Trading offers fast but inconsistent profits. Over time, investing builds wealth steadily, while trading can lead to big wins or big losses. The reliability of investing makes it the preferred choice for most people seeking financial freedom. Long-term investors benefit from overall market growth. Even average investors can win by staying invested and letting their money compound. The market tends to grow over time, and those who stay the course reap the rewards. Trading, meanwhile, depends on timing and skill. Traders face emotional challenges every day. Fear of losing money, greed for quick gains, and the temptation to overtrade can lead to mistakes. Investors, by contrast, focus on patience and discipline, avoiding the emotional pitfalls that derail traders. Wealth isn't built overnight. It takes time, consistency, and patience. The excitement of trading fades quickly, but the steady growth of investing lasts. If you want real wealth, Focus on the long-term approach and let your money work for you. Social media often promotes trading as a fast path to riches. Fancy charts and quick wins are everywhere online, but the reality is much tougher. Most traders lose money, and the hype doesn't reflect the risks involved. Investing may not be glamorous, but it's effective. If you want stable wealth, investing is the way to go. Trading offers the chance for fast money, but the risks are high. Most people are better off choosing the steady path of investing, especially if they have other commitments like a job or business. Trading requires emotional strength. You must be ready to lose money initially and handle the stress of daily market swings. If you're not prepared for these challenges, trading can quickly become overwhelming. Investing is much easier on your emotions. Trading demands hours of daily attention. You must monitor markets, analyze charts, and make quick decisions. Investing, by contrast, requires minimal time. You set your plan, make regular contributions, and let your money grow. The low time commitment makes investing ideal for busy people. If your goal is freedom, not just quick cash, long-term investing is your best bet. The steady growth and compounding returns provide financial security and independence. Trading may offer excitement, but investing delivers lasting results. You don't need a lot of money to begin investing. Start with what you have and build your portfolio over time. The most important step is to get started and stay consistent. Small beginnings can lead to big results if you stick to your plan. Consistency is the key to success in investing. Make regular contributions, stick to your plan, and let time do the work. The compounding effect will multiply your wealth, and you'll achieve your financial goals. Don't let short-term distractions derail your progress. Long-term thinking is essential for building wealth. Ignore daily market swings and focus on your goals. The biggest returns come to those who are patient and consistent. Investing is a marathon, not a sprint, and the rewards are worth the wait. The biggest returns in investing come to those who wait. Time and patience are your greatest allies. By staying invested and letting your money compound, you achieve results that traders rarely match. The waiting game pays off in the end. Overtrading is a common mistake among traders. The urge to make quick gains leads to frequent buying and selling, which increases risk and reduces profits. Investors avoid this trap by sticking to their plan and letting their money grow over time. Patience is the most important trait for investors. By resisting the urge to react to market swings, you stay focused on your goals and let time work for you. The rewards of patience are substantial, and the steady approach leads to lasting wealth. Discipline is essential for both traders and investors. Traders must stick to their strategy and manage risks carefully. Investors must follow their plan and make regular contributions. The disciplined approach increases your chances of success and helps you achieve your financial goals. Ultimately, the choice between investing and trading depends on your goals, personality, and risk tolerance. If you want stable wealth and low stress, investing is the best path. If you crave excitement and are ready for challenges, trading may appeal to you. Consider your options carefully and choose the strategy that fits you best. To sum up, trading can make money, but investing builds wealth. If your goal is freedom and financial security, long-term investing is your best bet. Start small, stay consistent, and think long-term. The biggest returns come to those who wait. Choose your path wisely and let your money work for you. Now that you understand the difference between investing and trading, it's time to take action. Decide which strategy fits your goals, start with what you have, and stay committed. Remember, wealth is built on consistency, patience, and discipline. Your journey to financial freedom begins today. Choose wisely and let your money grow.